Yeah, hi, hello friends. This is Sanjiv Bhasin with Investing Smart with Market Guru Sanjiv Bhasin, presented by IFL Securities. We have been regularly trying to update you on markets, on portfolios, on market behavior, on the market trend, and we've been one of the few who's been correct and who told you to buy the fear. Now I want to give you some tips for beginners who are first timers and who are entering the stock market, and what is the caveats or the nuances they should be prepared to face when they start to invest. Firstly, please set long-term goals. Depending on your age profile, below the age of 40, you should be 100% in equity. But the caveat here is, please look for at least 5 years as a minimum period, because anything below that will be speculative and will be dependent on the market volatility, which neither you or me can control. 2. Understand your risk tolerance. Don't invest more than you can keep on the side. Always invest that much which you have on a surplus. Secondly, your risk tolerance means don't go overboard where you may regret tomorrow, because the market can be painful in a short period. Thirdly, control your emotions. Your emotions will force you to look at markets when there is fear and greed. In the fear side, it will inhibit you to buy, and on the greed side, it will inhibit you to sell. So controlling of your emotions is very necessary. Don't hear the crowd and act on behest of some friend or some advisor. Do your research, look for good people, look for good mutual funds, look for good advisors. Hence, we will try and manage your money and explain to you what are the pitfalls and the roadblocks before the journey towards the upside begins. Fourthly, handle your basics well. Always remember, there is a macro and a micro of the economy which plays out to stock sectors, and in the long run, the only thing which drives stock prices is earnings. So if the earnings are there and you can see a business, then you are definitely on the right side. But don't try and catch small ideas where you are not aware of the reputation of the management, or you see some sort of leverage. These all nuances you have to go through, or trust your advisor. Fourthly, diversify your investment. How much ever any advisor advises only equity or debt, try and get a mixed, a balanced side. You must have some holdings in real estate, you must have some holdings in bonds, you must have overweight in equities, and fourthly, some in bullion, because all mixture of all four over a longer period of time gives the perfect mix. 5. Avoid leverage. Please, if you are an initial learner, don't get into the derivative market unless you understand the entire pitfalls. The idea of derivatives seems very lucrative because it has short-term gains, but once you get part of that cycle and you're not able to get out, you can run into huge losses, which will again deter your confidence and make you underconfident to invest. So understand what derivatives are, what is the nature of the animal, how does money go, how does mark-to-market go, and so on. Hence, avoid leverage for the beginners. These would be some standard tips which we think can get you through. If you want more advice, please call up your advisor. IFL Securities has been in this industry for the longest period. We are one of the top 3 stockbrokers, and we are there to give you our expertise and experience. If you like this channel, please press like. Thank you.